Welcome to the Deep Dive. We're here to unpack the big ideas and shifts happening around us. And today, well, we're talking about money.
Yeah, but maybe not money as you always think about it, not just cash or your bank balance.
Exactly. We're looking at something new, something central banks all over the globe are really seriously exploring. It's a digital version of national currency issued directly by them.
And it could fundamentally change things. Money is definitely evolving right now.
So we're diving deep into central bank digital currencies.
Yeah.
CBDCs. What are they really?
Hmm.
Are they just the next logical step, the future of how we pay? Or is this, heading into uncharted waters with maybe some hidden rocks?
Big questions.
Absolutely. So our mission today is to get a handle on what CBDCs actually are, how they might fit in with the money we already use, and look at the big promises and, let's be honest, the potential pitfalls too.
Yeah, the pros and cons for your financial life, essentially.
We've got a good stack of sources, central bank reports, economic analyses to help us navigate this. Okay, let's get into it.
Let's do it.
So starting basic, what exactly is a CBDC?
Okay, simply put, it's like a digital dollar or a digital euro or whatever your country's currency is. Digital format.
Right. But the key thing, the real game changer, is who issues it, isn't it?
Precisely. It's issued and, crucially, guaranteed directly by the central bank.
Ah, okay. So it's as safe as physical cash, basically, because the central bank itself stands behind it. A direct liability of the central bank.
Exactly. And that direct backing is, well, it's everything. Think about the digital money you use daily.
Like my checking account or payment apps.
Right. Your checking account money is a liability of your commercial bank, a private company. The money in apps like, say, Alipay or Venmo, also run by private companies.
Okay.
And then you've got cryptocurrencies, Bitcoin and the like, totally different beast. Decentralized, run by computer networks, no central authority. A CBDC is the opposite. It's centralized. The central bank is firmly in charge. That direct link, that backing from the highest financial authority, is what gives it that perceived rock-solid safety and stability. Makes it very different from other digital money.
That distinction really changes the picture. It makes you think, okay, if this becomes common, what happens to cash?
Yeah.
Actual paper money. And what about those payment apps we use constantly? Do they just disappear?
Yeah, that's the million-dollar question, isn't it? Or maybe the million-digital-dollar question.
Right.
Well, central banks, they generally say CBDCs are meant to add to the mix, not totally replace cash.
Okay, so coexistence is the plan.
That seems to be the official line. They point to a few reasons why cash would stick around. Privacy is a big one.
Mm-hmm. Cash is anonymous mostly.
Exactly. Transactions aren't easily tracked. And sources actually say it's probably not feasible to get rid of cash completely, partly because of these privacy worries.
Makes sense.
Plus, there's financial inclusion. Cash is vital for people without smartphones, maybe without reliable internet, or even without traditional bank accounts. Think remote areas, vulnerable groups.
Sure, you can't assume everyone has a smartphone and data plan.
And some central banks just want people to have a choice in how they pay. So yeah, cash use is declining, no doubt, and CBDCs could cut down on the costs of printing and moving physical money, but the idea is that cash will likely remain alongside CBDCs.
Okay, so cash probably isn't vanishing overnight. But those super popular payment apps, the Alipays, the WeChat Pays, the Venmos, are CBDCs coming for them? Are they rivals?
You know, what's fascinating here is that they're often framed more as potential partners or complements rather than direct rivals.
Really? Why is that?
Well, think about it. Those apps have a huge head start, that first mover advantage. They're incredibly convenient, woven into everyday life.
Yeah, I use mine for everything.
Right. And in places like China, even with the big push for their ECNY, their CBDC, people often just stick with Alipay and WeChat Pay because they do so much more chatting, videos, booking things.
So different roles.
Kind of. CBDCs offer that core central bank safety. E-money apps offer slick convenience and tons of extra features. And actually, central banks want CBDCs to work smoothly with these existing systems. Interoperability, they call it.
So they can talk to each other.
Ideally, yes. to make the whole payment system more efficient, more resilient. Plus, a CBDC might actually push the private apps to innovate even more, keep them on their toes.
Ah, competition drives improvement.
Exactly. The real hurdle for CBDCs is, frankly, getting people to use them if they don't offer clear new benefits over the apps they already know and like.
So it's not necessarily CBDC or apps, but maybe CBDC and apps and cash.
Precisely. We're likely looking at what some call a multi-rail future, different payment methods existing side by side, giving everyone more choice.
Okay, that multi-rail idea makes sense. But it still brings me back to, if the current systems, especially the apps, are so convenient and work pretty well, why are central banks putting so much effort into this? Why the big global push for CBDCs, like China with the ECNY? What's the grand vision?
That's a great question. If we look at the bigger picture, central banks are chasing several key potential benefits. You can sort of group them. First is really about modernizing finance for efficiency and access.
Okay, like upgrading the plumbing.
In a way, yes. Updating the payment systems, making sure central bank money, which is the ultimate safe asset, stays relevant in a world that's going digital fast.
So making transactions quicker.
Cheaper. That's the goal. Faster, more efficient, maybe lower cost. Near instant money movement, and ensuring everyone, literally everyone, has access to a super safe digital form of central bank money, one that isn't vulnerable if a commercial bank fails.
Right, that safety aspect again. What else?
Second big area is societal impact. A big part of this is financial inclusion.
Helping people who don't have bank accounts.
Exactly, the unbanked or underbanked, often just needing a simple mobile phone. Some CBDCs are even designed with offline payment features for places with patchy internet.
Oh, that's interesting.
And this leads to probably the most talked about feature, smart money or programmability.
Programmability. Okay, that sounds powerful. What does it mean?
It means using smart contracts to embed rules directly into the money itself.
Like, give me an example.
Okay, imagine government aid for school lunches. It could be programmed so it can only be spent at the school cafeteria. Or maybe disaster relief funds that expire if they aren't used by a certain date to encourage quick spending.
Right.
Or it could protect you if you pay for something up front, like a gym membership. If the gym goes bust, the money, programmed correctly, could potentially be returned automatically.
Wow. Okay, that is a different way of thinking about money.
Definitely. And the third broad category is enhanced oversight and global links. CBDCs could give central banks new tools to track money flow, potentially helping fight crime like money laundering, especially for larger sums.
More transparency.
Potentially, yes. And for international payments, CBDCs could make sending money across borders way cheaper, faster, and simpler by cutting out some of the middlemen. There are active projects like Embridge exploring exactly this.
Connecting different countries, CBDCs.
Right. And finally, some think CBDCs could give central banks better tools for managing the economy, monetary policy effectiveness, maybe allowing for more targeted stimulus or faster aid distribution in a crisis.
That's quite a list of potential benefits. Modern systems, inclusion, that really intriguing smart money idea, crime fighting, smoother global payments. It paints a very optimistic picture.
It does. The potential upside is significant, according to proponents.
But, and you knew there was a but coming. That word programmability, while cool for school supplies, also sets off alarm bells for a lot of people. Control.
Yeah.
It feels like there has to be another side to this coin. What are the downsides? The risks?
Absolutely. And this is where the debate gets really heated. The trade-offs are significant. Probably the biggest concern you hear is about less privacy, more surveillance.
Because it's digital and centrally controlled.
Exactly. Unlike cash, which is largely anonymous, CBDC transactions could, theoretically, be tracked quite easily by the central bank. The fear, voiced loudly by critics, is that governments could gain unprecedented insight into everyone's financial lives.
Monitoring every purchase, every transfer.
That's the worry. An infringement on personal freedom. Now, you could argue private apps already collect tons of data.
True, they do.
But maybe people feel they get something back, like convenience or fun services. And maybe some people trust private companies, or at least the choice between them, more than a single government entity holding all that financial data.
That's a fair point. What other risks tie into that control aspect?
Well, building directly on that is the concern about government control over your money, the darker side of programmability.
Okay, beyond just tracking, actually controlling how money is used.
That's the fear. While smart money for specific aids sounds good, the same tech could hypothetically be used, critics argue, to impose negative conditions.
Like what?
Like best before dates on your savings to force spending and stimulate the economy, whether you want to or not, or spending caps, limits on how much you can transfer or who you can transfer to, blocking payments to certain individuals or organizations.
Wow.
Some even discuss extreme scenarios like money being geofenced, only usable in a specific city or region, or having a curfew where you can't spend it during certain hours.
That sounds dystopian.
It raises serious flags about economic freedom, personal autonomy, even human rights. Could governments impose penalty taxes on things they disapprove of, like junk food or items deemed not green enough? Could they even force loans from citizens' accounts in a crisis? These are the deep concerns being raised.
Okay, so massive privacy and control worries. What else?
Another major one is the risk to regular banks. It's called bank disintermediation.
Meaning people pull money out of normal banks.
Exactly. If everyone decides, hey, central bank money is safer, I'll keep my funds in a CBDC wallet, then commercial banks could lose huge amounts of deposits.
And they need deposits to lend money out, right?
Precisely. Less deposits means less lending capacity or higher borrowing costs for businesses and individuals. It could potentially destabilize the whole financial system if not managed incredibly carefully.
Right, that could be a huge unintended consequence.
Then you have the obvious cybersecurity and technical risks. A national digital currency system. That's a massive target for hackers, state-sponsored or otherwise.
Yeah, the potential for theft, counterfeiting, or just system crashes must be enormous.
Huge. Public trust could evaporate instantly after a major breach, and it all relies on electricity and the internet. What happens during a power outage or a major network failure? Your digital money might just be inaccessible.
Unlike cash in your pocket.
Right. And finally, there's a very practical problem. Just getting people to use it.
We talked about that with the apps. Why switch if what you have works?
Exactly. Adoption has been really slow where CBDCs have launched. Even with promotions like digital coupons in China, people often default back to Alipay or WeChat Pay because they're convenient and offer more.
So why is adoption so tough?
Lack of a clear killer app or unique benefit for the average user, not enough public awareness or education, limited places to actually spend it, that chicken and egg issue where merchants won't accept it if customers don't use it and vice versa, lingering privacy fears, no ongoing incentives. Plus, it's expensive for the central bank itself to build, run, and constantly secure these massive systems.
Okay, so wow, a real balancing act. Efficiency and inclusion on one side, but massive risks around privacy, control, bank stability, security, and just plain old user apathy on the other. It feels like walking a digital tightrope.
That's a good way to put it.
Given all these complexities, what's the global picture look like? Are there different kinds of CBDCs being built? Where are different countries actually at in this process?
Yeah, there are broadly three main types being explored. First is retail CBDC. That's the one for everyday people like you and me, for daily shopping. Think digital cash.
Okay, the main one we've been discussing.
Mostly, yes. Then there's wholesale CBDC. This is designed for big financial institutions, for banks to settle large payments between themselves ultra-fast and efficiently, like a digital highway just for the big players.
Got it. Interbank stuff.
Right. And third is cross-border CBDC. The specific goal here is making international payments faster, cheaper, and less complex, often by linking different countries' CBDC systems together. Project Mbridge, which involves several central banks, including China and the UAE, is a key example here.
Okay, so different flavors for different needs. And where does the world stand? Is everyone jumping in?
The activity level is incredibly high. Something like 93 or 94% of central banks surveyed are looking into it, researching, experimenting, running pilots. That covers countries representing about 95% of global GDP. It's huge.
So almost everyone is at least exploring it.
Pretty much. Projections estimate maybe 15 countries could actually launch a full CBDC by 2030. We've seen a few, mostly smaller economies, fully launch already. The Bahamas has the Sand Dollar, Jamaica has Jamdex, Nigeria the eNaira, and a group of Eastern Caribbean nations have one too.
And the big economies.
They're mostly in advanced pilot or design stages. China's ECNY pilot is probably the most watched. It's running in 17 provinces now, and they're pushing government and corporate use. The European Central Bank is deep in a preparation phase for a digital euro, maybe starting the build phase late 2025. The Bank of England is designing a potential digital pound. India is running a retail pilot with millions of users already. South Korea, Kazakhstan, lots of testing going on.
That is a lot of movement globally.
Yeah.
But here's the crucial question again. For those that have launched, how's the adoption actually going? Are people flocking to use them?
Well, this is where we hit that sobering reality we touched on earlier. User adoption has been, frankly, quite slow. Disappointingly slow for the proponents.
Really? Give me some numbers.
Okay, the Bahamas Sand Dollar launched in 2020. By early 2023, after about 3 years, only around 100,000 wallets created. That's maybe 25% of the adult population.
Right.
Not exactly explosive growth. Nigeria's Naira launched late 2021. After a year, maybe 900,000 wallets. Sounds like a lot, but in Nigeria, that's only about 0.5%, 0.5% of the population. Tiny.
Wow. Okay. And China, with all the promotion.
Even there, it struggled against the incumbents. Despite all the digital red envelopes and discounts, people mostly use Alipay and WeChat Pay for daily stuff. The amount of ECNY actually circulating is minuscule, like 0.16% of the physical cash out there. And the average amount held in an ECNY wallet is tiny, around 11 or 12 yuan, which is less than $2.
Less than $2. So people aren't really using it as a primary way to hold or spend money then.
Doesn't seem like it, not for the average consumer yet. It reminds me, of when QR codes first came out for payments. People had cash, they had cards. It takes a really compelling reason, a huge shift to change those deep-seated habits.
And why is it so slow? Again, just remind us.
It boils down to what we discussed. User preference for existing apps that offer more features and convenience. A lack of a clear, unique benefit for switching. Not enough public understanding. Limited merchant acceptance, that chicken and egg thing, those persistent privacy concerns. A lack of ongoing incentive, not just one-off giveaways. And also the high setup costs and maybe lack of enthusiasm from commercial banks who have to integrate it but don't see a huge profit in it for themselves.
So it's a complex web of challenges facing CBDCs, even beyond the big conceptual risks.
Definitely. The practical hurdles are proving very real.
Okay. So we've really covered a lot of ground today. We journeyed through this whole world of CBDCs, defining what they are, looking at the big promises like modernizing finance, boosting inclusion, that intriguing smart money, but also diving into the really significant risks around privacy, government control, the potential disruption to banks, security, and these very real challenges in just getting people to use them.
It's clear the ambition is massive, but the path forward is complicated.
Yeah. And what really sticks with me is that idea of a multi-rail future. If CBDCs do eventually gain more traction, they likely won't replace everything else. They'll probably coexist with cash, with our current apps, creating maybe a more diverse, hopefully more resilient financial system overall.
That coexistence seems the most plausible outcome, at least for the foreseeable future. And it leads to a final thought, maybe something provocative for listeners to chew on.
Oh, go on.
As money becomes increasingly digital, with these new forms like CBDCs potentially entering the mix alongside powerful private platforms, what does this all mean for something fundamental? Trust.
Trust. Interesting. Trust in whom?
Exactly. Trust in central banks. Trust in private tech companies. Trust in the government. Trust in the security of these systems. Maybe even trust in the very nature of what money is and how it functions in society. As everything shifts, where does our trust lie and how might that change? What stands out most to you as you think about money's future?
That's a really profound question. Where does our trust lie in this increasingly digital financial world? Something definitely worth pondering as this evolution continues.
Indeed.
Thank you for joining us on this deep dive today, exploring the truly fascinating and incredibly complex future of money.